Yo, what's up, guys? Welcome back to another stream. So today, taking a look at Nike. I was about to say Mikey, but Nike. Yeah, get some water real quick. So taking a look at Nike, this is kind of the continuation of my VF analysis. It's a continuation of my VF Corp analysis. So I think in a few different streams I was looking at VF Corp. It's participates in kind of the same markets and industries that Nike participates in. So you have the apparel, footwear, and accessories industry. VF has Vans, North Face, Timberland, Supreme, Dickies, Ultra, JanSport, which I think it's going to sell, Eastpak, Icebreaker, Woolrich, sorry, not Woolrich, Smart Wool. It has about 11 brands in its portfolio, at least meaningful brands. And recently, it's been taking a hit in the share price. There's been some activist investors, new board refresh, and the company is looking to turn around. So I'm pretty excited about the company, and we'll see how it plays out. Nike, on the other hand, is, I think, facing maybe not so great share or stock, maybe business. I'm thinking about a word here to describe it. Maybe it's the word I'm looking for is business cycle. It's in a not so favorable business cycle right now. It had, I think, a decrease in earnings and a decrease in revenue, or it didn't meet investor expectations about the quarterly revenue growth that they were projecting. I think I kind of lost my train of thought there, which I think is going to happen a few times during this stream because it's pretty late now, and I don't know how long I'll be doing this for, but I guess we'll see what happens. Okay, so Nike, before I even look at the stock price, let's take a look at the annual reports. Okay, so Nike reports third quarterly results. I wonder if there is going to be some type of SEC filings. Here we go. Okay. So there's a few interesting things. Okay, so this is just an 8K file to just talk about the upcoming annual report. Okay, well, there's also new updates or new financing agreement with Bank of America. Up to $1 billion of borrowing. So term secured overnight financing rate plus 0.10%, plus an applicable margin, or B, a base rate defined at the highest of Bank of America's prime rate, which I'd assume is maybe the 10-year U.S. Treasury. The federal funds effective rate plus 0.5%, and 1 month term secured overnight financing rate plus 1%. Okay, so I don't really care about this right now. Okay, wow, so I didn't realize that whenever you had, I guess you could call this a loan agreement or a credit facility agreement, it's going to be super long, 100 pages long, and my screen just froze, so going to try to save this here. Okay. Yeah, why is this so long? Okay, yeah, there is so much stuff here. I'd assume that this is all lawyer written, all lawyer written stuff. Okay, so there's that. I maybe shouldn't really care about that right now. Unaudited, condensed, consolidated statements of income. I do want to download the XLS and take a look at what they have here. Alright, so they did have an increase in revenues and an decrease in their cost of sales. So either they became more efficient maybe, or maybe they sold less units, increased the price. So of their products, I guess that depends on the change in inventory. Demand creation expense. I guess this is going to be marketing, selling. Okay, maybe not selling, but marketing expense. Oh, operating overhead expense. Maybe this has to do similar. I'd assume that operating overhead expense is maybe some type of expense dealing with paying for stores, like leases, and maybe corporate expenses, paying designers. Could be that, paying for the HQ. This could also maybe fall into selling and administrative expenses. And so you have interest expense, and then other income expense. You have income before taxes, and then income tax expense, net income, and then you have your earnings per share. So you do have an increase in earnings per share quarter over quarter and also month over month. But I guess maybe the expectations of the increase was a bit higher than what was previously factored into the share price. So I guess when that happens, usually share prices fall. Now, let's take a look then at so table 3, this is the total comprehensive income. So take net income. All right, you adjust for any, I guess, Forex changes on cash flow hedges. I'm not entirely sure what this is, to be honest. Change in net gains or loss and other, don't know what that is. Total other comprehensive loss net of tax. Okay. It's a balance sheet. There, oh wow, there's a lot of cash within Nike, about 7 billion. Not too much short-term investments. accounts receivables, inventory. So inventory did decrease. Maybe this has to do with this ends on November 30th, which okay, that's actually kind of that's a long time ago. So yeah, that is a while ago. But there was a decrease in in inventory, surprisingly, and also an increase or a decrease in costs of goods sold. So maybe they record their inventory, I'm not entirely sure, on a last in, first out, or last in, first out, first in, first out. I think last in, first out is kind of like a queue. Oh, sorry. It's going to be like a stack, and a first in, first out is going to be a queue. So prepaid expenses and other current assets. Okay, so the company does have a lot of current assets. That's a decent amount. Plant, property, and equipment. Okay, it's not too much. Goodwill, very little goodwill. I guess the company hasn't really made too many acquisitions aside from Converse. Maybe another one that I haven't heard of, but I think Converse is probably the biggest one. All the other companies, I guess, or maybe not companies, but brands. Oh, Hurley too. I think Hurley's another one. But Nike and Jordan, LeBron, these were all developed in-house. So I don't think goodwill and identifiable tangible assets are going to show up on the balance sheet. Okay. So this is where we get to the liabilities. We have notes payable and accounts payable. Current portion of operating lease liabilities. We have accrued liabilities. I wonder what that is. We have income tax payable. Total current liabilities, long-term debt. Oh, I am getting a call. Where am I? No. Sounds good. So, operating lease liability. You have about $2,000 in operating lease liabilities, deferred income tax, and other liabilities. Long-term debt relatively stay the same. There's really no debt pay down. Total current liabilities, so it did decrease with a decrease in accounts payable. So maybe Nike decided to pay its suppliers and not purchase a lot of inventory. So we have Class B, Class A, there's nothing. Capital in excess of stated value, accumulated, other comprehensive income, retained earnings about 1,000, total shareholders equity. Okay, 14,000. So decent amount of, I guess you could say, assets to liabilities. Now the cash flows, let's take a look here. We have about $3 million in net income. 6 months ended November 30th. I guess they don't have a quarter. So depreciation, deferred income tax, stock-based compensation, amortization, net foreign currency adjustments, increase, decrease. So this is working capital. So decent amount of cash provided by operations. Increase in inventory. So I see. This free cash flow, or not free cash flow, but cash provided by operations. This is how much is left over after considering working capital needs. And I think the company Okay. I'm not entirely sure why there were so many accounts receivables. Maybe through credit card transactions. Therefore, it's probably increasing the amount of revenue. Previously, yeah, this is really high. I'm not entirely sure why. Purchase of short-term investments. Okay. Maturities of short-term investments. Sales of short-term investments. Additions to property, plant, and equipment. Other investing activities. Cash provided. Okay, so there's a net positive cash amount. Proceeds from exercise of stock options. Other stock issuance. Repurchase of common stock. Dividends, common and preferred. So there's been a lot of repurchasing done, about $2 billion. And effects of exchange rates. Okay, so the company Nike is Yeah, so Nike seems to have a pretty strong repurchasing strategy of common stock and also dividends, common and preferred. So let's understand the business a little bit more. So it doesn't really say here. I think then let's take a look at 2023 annual filings, PDF. Okay, so let's do Nike.qmd. Okay. Title, Nike, author, right. Okay. So the business itself. Reports, fiscal year, ended May 31st. Okay. Okay, so say there's three main this is, I guess, Nike divest early. So Nike, Jordan, Converse. It calls itself a consumer products business to continually adapt to changing tastes. Retail accounts in the United States. During fiscal 2023, our three largest United States customers accounted for approximately 22% of sales in the United States. This is interesting. So you could say distribution. Nike sells its business directly to consumers through Nike.com, Nike factory stores, Nike brand stores, Nike also sells its products through traditional retail accounts. So think of Dick's, Macy's, Foot Locker, soon. Three of Nike's retailers account for 22% of its revenue. Retail accounts. Three of Nike's retail accounts form. Okay. So we could say stores, fiscal 2023. Nike brand factory stores. Nike brand inline stores. Converse stores, including factory stores, plus US market. Maybe this is something where I would want to put this in Python. Factory stores, US, Nike brand stores, US, Converse stores, US. 213 74 39 369 82. Global. So we have 560, 49, 52. Okay. Nike Air, Zoom, Free, Dry Fit, Flyknit, FlyEase, Zoom X, Air Max, React for technologies. Vietnam, Indonesia, China. Okay. Okay, so they break it down by footwear and apparel. Air Manufacturing Innovation, now wholly owned subsidiary, facilities near Beaverton, Oregon, and So it seems like from its supply chain, so Nike has a consortium of contract manufacturers overseas. So it seems like biggest ones are Vietnam, China, Indonesia. Okay. U.S. Foreign Corrupt Practices Act could be interesting to look into. So competitors. This is where they have VF Corporation. Okay. Adidas. I like how they lowercase Adidas. Onto A6. Leaning. Lululemon. New Balance. Puma, UA, VF. Great, so I guess they can claim this, that they are in fact the largest seller of athletic footwear and apparel in the world. Interesting. So as part of our commitment to make a positive impact on communities, we maintain a goal of investing 2% of our prior fiscal year's pre-tax income into global communities. Okay. That's cool. Provides employees an opportunity to work from a location of their choice for up to 4 weeks per year. So I guess when you think about valuing a company, maybe there's also a big human capital aspect to it too. Okay, I am getting a call right now, so I think this is my time to sign off. I'm gonna add one more note. Human capital and employees. Okay, so I'll see you guys in the next stream.